Hi, this is the market outlook for SPX, and we'll have a quick look on the Russell as well for the week ending Friday the 12th. So we are going into Easter week, a shorter week with Friday being off. Now I'm starting with the intraday chart, and the intraday chart is showing that we have a pattern that started on March 8th, then around 27.25, then up to around 28.60 on 21st of March, and then retraced a bit to the 27.85 area. All the supports in the last few weeks have been clearly identified, and I was probably hoping that one of those would break to get into consolidation. That never happened. The bull train is still charging ahead, and we have seen now since end of March to now the market rising almost without any interruption, maybe bumping on a apparently strong resistance around 28.90, and now is going higher. On Friday it closed on the low 2900s. And if we look at a possible target, it could be 28.23. We have a stall resistance also in a 29.30 area, and I think we are heading there. The next strong resistance will be on the 29.70, which we have seen also in 2018. So this is for the short-term outlook, probably for the next few days. Now, if we look at the daily chart, the market actually going up, but maybe at a slow pace. And this is maybe not a good thing, because if the market rises strongly, there will be turbulences and probably profit taking. If the market just grinds up the way it is, chance that the market will just aim higher and to go to the highs that we've seen in October last year. It's actually around here, around 29.30. The next target would be the almighty 3,000, and we're not too far now. So will the market retrace? Yes, most probably. There are some macroeconomic factors, yield inversion, interest rates, possible recession, which are completely shunned by punters and market participants in general. So the market could just grind up higher before recession now knocks off buyers off the balance, and maybe the tug of war will be into sellers' advantage at some point. But now we are far too close to the all-time highs to derail the train in short term. So the market will just go up. We could have a post-Easter reaction, hesitation around those levels, but we are definitely aiming for the 3,000 mark very soon. If we now look at VIX, we are definitely in the contango. Not much difference in terms of volatility over the last day. And now with rollover coming, we should actually not look too much into April, which is now rock bottom in terms of volatility. And we have, of course, a strong contango from May to June, July, August. But this could flatten. So we'll see what the rollover effect, and it will probably only materialize the week after next. So we will look into this in the next weekly recap. So now let's go back to the chart and have a look at the Russell. The Russell has a similar pattern, except that it's actually further from the all-time highs at 127.50. The market could probably also now aim for the 16.10, maybe a bit higher if we plot a pattern here. We see that we have passed, in any case, we have passed the what should have been a strong support, a strong resistance. So the market could aim at 16.36. This is not a very important level. And it could just do it the same way, try and go for the all-time highs, although it may not reach it. The correlation with SPX is strong, but it's not perfect. The SPX is actually more correlated to the Dow than to the small caps. So not much to say about the Russell, still grinding up. Maybe we'll see a trading range with the market hovering in this range from 1,500 to 1630, 1650 area. Right, so that's it for this short weekly recap. I mean, this is a crazy market. Something for the more technically inclined. There is something to analyze the power of a trend called the natural angle of descent or ascent. some of you who may have studied physics, you could think of, for example, a heap of sand. If you drop a few grains of sand on top of a heap, it will naturally fall on an angle, and that angle is determined by friction, of course, the size of the grain, etc., etc. But assuming they're spherical, and there will be friction, and in fluid mechanics we would call it viscosity. And it may be more applicable because in terms of fluid mechanics, you can actually see the turbulences caused by that friction. So what I want to say is this is probably higher than the natural angle of descent. This was actually a soft one. This one is still higher than the soft one, and even this one, there are random events that can cause a change in train at any point in time. But what I'm saying is that when a train is about like this, it's usually fairly stable. So this one is probably still fairly stable. We may have a small consolidation. I'm not looking at Elliott waves or things like that, but if we look at this consolidation, that was minimal compared to the bull rise that we had there. So we may have another wave, and again, I'm not looking at Elliott or anything like that, but what I'm saying is that this is a fairly stable, fairly consistent rise at an angle that could actually sustain a further rise. Of course, again, random events can occur anytime. So what I'm saying is that this angle of attack is pretty difficult to model, although neural networks can do a fair job at that. So what I'm saying now is that although it seems to be slowing down, it can actually go higher with maybe some ripples to actually test the former resistance could be tested as a support to then go for the 3000 level. It's a little bit uncertain, but I would say the bull trend is still there.